Did you know that in trading, doing absolutely nothing is often the most profitable action you can take? We are conditioned by society, from school to the corporate world, to believe that productivity equals activity. We think that to make money, we must be clicking buttons, entering positions, and working the market. But the market is counterintuitive. It does not pay you for your effort. It pays you for your accuracy and your patience. When you force a trade just to feel productive, you are falling into the dangerous trap of treating the market like a slot machine rather than a business. The reality is that the most successful hedge fund managers and proprietary traders spend 90% of their time waiting and only 10% of their time executing. If you are trading every single hour or even every single day, you are likely overtrading. The first step to mastery is understanding that flat, having no open positions, is actually a valid strategic position. It is the position of potential, protecting your capital for the moment when the odds are overwhelmingly in your favor.
It looks like a winner. It smells like a winner. But deep down, you know it's a trap that will drain your account. This is the B-plus setup. It is the most dangerous pattern in trading because it is deceptive. An A-plus setup screams at you. It checks every single box on your checklist, has perfect volume, ideal structure, and aligns with the macro trend. A B-plus setup, however, is missing something. Maybe the volume is slightly low, or the resistance level is a bit too close, or the news catalyst is weak. It is good enough, or so you tell yourself. You take it because you haven't traded in 3 hours, and you are bored. But B-plus setups are where edges disappear. In a B-plus setup, your probability of success drops from a confident 80% down to a coin flip. Over time, the accumulated losses, commissions, and mental stress from these mediocre trades will eat away all the profits you made from your great trades. Recognizing mediocrity is the first defense against it.
Let's look at the cold, hard math of why B-plus setups are account killers compared to taking no trade at all. Trading is a game of expected value, or EV. An A-plus trade has a high positive EV because the win rate is high and the risk-to-reward ratio is skewed in your favor. A B-plus trade, however, often hovers near a neutral or slightly negative EV once you factor in slippage and fees. If you take 10 B-plus trades, you might win 5 and lose 5. On the surface, you broke even. But in reality, you lost money on spreads and commissions, and you lost significant mental energy. Now compare that to taking no trade. When you take no trade, your P&L remains exactly at zero. Zero is mathematically superior to a negative expectancy strategy. By filtering out the B-plus noise, you stop the slow bleed of your account. You must view your capital as a finite resource that should only be deployed when the statistical advantage is undeniable, not just when a chart looks sort of interesting.
While you are stuck sweating over a mediocre trade that isn't moving, the trade of the year might just flash right by you. This is the concept of opportunity cost, and it is the hidden killer of profitability. When you tie up your buying power in a B-plus setup, you are effectively sidelining your capital. Imagine the market suddenly presents a pristine, high-probability A-plus setup. If your capital is locked in a choppy, sideways trade that you shouldn't have taken, you have two bad choices. You either miss the A-plus move entirely because you have no cash, or you frantically close your B-plus trade at a loss to chase the new one, entering late and frustrated. By choosing no trade over a B-plus setup, you remain liquid, agile, and ready to strike. You preserve your mental bandwidth and your purchasing power for the moments that truly matter. Being in cash allows you to be an opportunist. Being in a bad trade makes you a victim of the market's whims. Your bank account isn't the only thing you deplete when you force a subpar trade. You are burning through your limited supply of mental capital. Decision fatigue is real. Every time you analyze a chart, enter a position, and manage risk, you are using cognitive energy. B-plus setups are exhausting because they rarely go smoothly. They chop around, they test your stop losses, and they require constant monitoring. The stress accumulates. By the time a real A-plus opportunity presents itself later in the session, you might be too emotionally drained to execute it properly. You might hesitate because the B plus trade shook your confidence, or you might size down when you should be sizing up. Taking a no-trade approach preserves your psychological state. It keeps you fresh, focused, and emotionally balanced. When you protect your mental capital, you ensure that you are operating at peak performance levels when the market finally aligns with your strategy. Protecting your mindset is just as important as protecting your wallet.
The most undervalued asset on your trading screen isn't a tech stock or a volatile crypto token. It is your cash balance. Many traders feel a burning sensation in their pocket when they have cash available. They feel they are missing out on growth. But professional traders view cash differently. Cash is a strategic option with no expiration date. It is a position of strength that gives you the ultimate flexibility. When you are 100% cash, you are immune to sudden market crashes, flash crashes, or overnight news risks. You sleep better. You have clarity. The no-trade decision effectively increases your position in cash. This allows you to stand on the sidelines while the bulls and bears slaughter each other in a choppy zone, waiting to enter only when the dust settles and the direction is clear. Embracing cash as an active position shifts your mindset from, I need to find a trade, to the market needs to prove why it deserves my cash. This shift in power dynamics is crucial for long-term survival.
Fear of missing out is the silent killer of more trading careers than market crashes ever were. FOMO tricks your brain into thinking that every green candle is the start of a massive rally and every red candle is the beginning of a crash. It compels you to jump into B-plus setups because you are terrified that the train is leaving the station without you. But here is the truth. The market will always be there. There will always be another trade. When you succumb to FOMO, you are trading your emotions, not the chart. Choosing no trade is the ultimate act of discipline over emotion. It is a declaration that you are in control. When you can watch a stock run up without you and feel zero regret because it didn't meet your criteria, you have achieved trading maturity. You must reframe the miss not as a loss, but as a victory of your system. You successfully filtered out a trade that didn't meet your standards. That is a win for your process.
In the battlefield of the markets, spraying bullets blindly will only get you carried out on a stretcher. You must decide if you want to be a machine gunner or a sniper. The machine gunner fires at everything that moves. These are the traders taking every B-plus setup, racking up commissions, and hoping something hits the target. They are loud, messy, and usually run out of ammo quickly. The sniper, on the other hand, lies in wait. The sniper creates a no-trade zone for hours or even days, observing the wind, the distance, and the target. They wait for the perfect alignment of variables. When they finally pull the trigger, it is one shot, one kill. The efficiency of the sniper approach is undeniable. By refusing to fire at B-plus targets, the sniper conserves ammunition, capital, and ensures that when they do engage, the probability of success is maximized. In trading, accuracy trumps volume every single time. Be the sniper, waiting patiently in the bushes, not the frantic soldier running into the open fire.
Imagine ending the trading day with zero profit, zero loss, and feeling like a total champion. This is a feeling you need to cultivate. Most traders only journal their entries and exits, analyzing what went right or wrong with the trades they took. But few journal the trades they didn't take. You should start a section in your trading journal specifically for the ones I let go. Document the B-plus setups you identified but chose to skip. Write down why you passed on them. Was the volume too low? Was the stop loss too wide? Then track what happened to those trades. More often than not, you will see that they failed or chopped around aimlessly. Seeing this data reinforces the neural pathways in your brain that associate doing nothing with good decision-making. It validates your discipline. When you can look back and see that your no-trade decisions saved you from thousands of dollars in losses, you will start to value the art of sitting on your hands.
Offense sells tickets, but defense wins championships. And in the world of trading, defense saves your livelihood. We are obsessed with the offense, the big wins, the massive percentage gains, the screen caps we can post on social media.
But professional trading is a game of risk management, which is purely defensive. Taking a B-plus setup is a lapse in defense. It exposes your flank to unnecessary danger for a mediocre potential reward. By choosing no trade, you are playing elite-level defense. You are keeping your drawdown small. The mathematics of drawdown are brutal. If you lose 50% of your account chasing bad trades, you need a 100% gain just to break even. Avoiding the loss in the first place is infinitely easier than digging yourself out of a hole. Your primary job as a trader is not to make money, it is to protect what you have. Profit is merely the byproduct of excellent capital preservation. When you prioritize defense, the offense takes care of itself when the right opportunities arise.
Amateurs look for reasons to enter a trade. Professionals look for reasons to stay out. This subtle shift in perspective changes everything. When an amateur looks at a chart, their confirmation bias kicks in, and they start inventing reasons to buy. Oh, it's bouncing off a moving average. The RSI is low. It looks cheap. They are hunting for a B-plus excuse to gamble. A professional looks at the same chart and acts as a risk manager. They ask, what can go wrong here? Is the volume declining? Is there overhead resistance? Is the sector weak? They actively try to disqualify the trade. If a setup can survive the professional's rigorous interrogation and attempts to reject it, then, and only then, does it become an A-plus trade worth taking. If you can find a reason to say no, you should. The no trade is the default state of the professional. You are the gatekeeper of your portfolio, and you should be the strictest bouncer in town, letting only the VIP setups inside. Your brain is actively conspiring to trick you into taking that subpar trade through a cognitive glitch known as action bias. Evolution wired humans to believe that doing something is always better than doing nothing. If a predator is chasing you, running is better than standing still. But the market exploits this evolutionary trait. When we sit in front of our screens, we feel a psychological discomfort if we aren't clicking buttons. We feel like we aren't working. This leads to the hallucination of opportunities where none exist. We start projecting patterns onto random noise just to relieve the tension of inactivity. Recognizing action bias is the first step to defeating it. You have to train your brain to understand that in trading, patience is an action. Waiting is an active, strategic choice, not a passive failure. You must become comfortable with boredom. If you are trading for excitement or to feel busy, go to a casino. If you are trading to build wealth, embrace the incredible power of doing nothing until the moment is right.
What if I told you that avoiding a loss is mathematically more powerful than chasing a small win? Let's talk about the cumulative effect of the no-trade philosophy. Think about your last 10 losses. How many of them were stupid, impulsive trades on B-plus or C-minus setups? Probably most of them. If you had simply sat on your hands during those times, your equity curve would look drastically different today. It's not just about the money lost, it's about the compound growth you interrupted. When you preserve capital by skipping a B-plus trade, you have a larger base to compound from when the A-plus trade hits. If you take a loss on a mediocre setup, you reduce the capital available for the winning setup. Over the course of a year, the difference between a trader who takes B-plus setups and one who only takes A-plus setups is not just a small margin. It is the difference between blowing up an account and making a living. The cumulative effect of saved losses is the secret engine of wealth creation.
You need a bouncer at the door of your portfolio, and he needs to be the toughest guy in town. You achieve this by building a rigid, non-negotiable criteria list. You cannot make these rules up on the fly. You need a physical checklist next to your monitor. It should include volume requirements, time of day, correlation with the overall market, risk to reward ratio, and specific technical indicators. If a setup meets 4 out of 5 criteria, it is a B-plus setup, and the answer must be no. It has to be an unconditional hell yes on every single point, or it is a pass. This binary approach removes emotion from the equation. You aren't feeling the market. You are executing a logic-based algorithm. If the market doesn't offer a setup that ticks every box, you simply do not trade. This might mean you go 3 days without a trade.
That is fine. In fact, that is excellent. It means your filter is working, protecting you from the noise that bankrupts the impatient.
Once you stop looking for garbage, your brain will suddenly start spotting the gold. This is due to a part of your brain called the reticular activating system, or RAS. The RAS filters the massive amount of information your senses receive, letting in only what you focus on. If you focus on finding any trade, your RAS will highlight every mediocre B+ pattern, flooding you with bad data. But if you program your RAS to look only for specific A+ criteria, you effectively tune out the noise. You won't even notice the choppy, dangerous price action that used to trap you. You will scroll through charts and see nothing, until, boom, the perfect setup jumps off the screen. By committing to no trade on anything less than perfect, you are training your brain's hardware to become a highly specialized pattern recognition machine. You reduce decision fatigue and increase clarity, allowing you to react instantly and aggressively when the real opportunity finally appears.
Picture a choppy market environment where every breakout fails and every breakdown reverses. This is known as the churn. In this environment, the market is designed to kill both bulls and bears. The trader who is addicted to B+ setups gets slaughtered here. They buy the breakout, it reverses, and they get stopped out. They short the breakdown, it rips higher, and they get stopped out again. They are bleeding capital with every click. Now, observe the no-trade trader. They look at the chart, identify the lack of clear direction, recognize the lower volume, and simply walk away. They might go to the gym, read a book, or study old charts. When the market finally breaks out of the range 2 days later with institutional volume, the B+ trader is broke or too psychologically damaged to pull the trigger. The no-trade trader, however, is fresh, capitalized, and ready to catch the entire trend. Sitting out the churn is not passivity. It is the ultimate strategic advantage in a chaotic environment.
Your trading success isn't defined by how many buttons you click, but by the ones you don't. We have covered the math, the psychology, and the strategy of why no trade is often the best trade. Now, I have a challenge for you. For the next 5 trading days, I want you to adopt a sniper mindset. Commit to taking 0 trades unless they are absolute A+ setups that meet 100% of your criteria. If you go the whole week without making a single trade, consider that a successful week. You protected your capital. You defeated your impulses. You acted like a professional fund manager. Document how you feel. Notice the reduction in stress and the clarity of mind. Remember, the market is an endless stream of opportunities, but your capital is finite. Treat it with respect. Stop settling for B+ setups. Embrace the power of the no trade. Survive the noise and be ready for the trade that actually changes your life. Now, turn off the screen if there's nothing there and walk away.